The result of this may not be the toppling of Russia and its attempts to reform the Soviet Union, but it may end up being the toppling of America. I mean, Russia was this one great superpower, and then there was the United States. Well, Russia collapsed, but the United States remained as the sole remaining superpower. But our economy, our industrial base continued to disintegrate, and we may now be on the cusp of the collapse of our empire. And it might be ironic that the nation that ends up pushing us over that precipice is what remains of our former adversary in the Soviet Union, Russia. The Fed is going to blame a lot of the new inflation on Russia. It doesn't have to blame it on COVID anymore. It can blame it on Russia. And it's going to be an excuse to allow rising inflation. Just like they claimed it was transitory because of supply chain bottlenecks, well, now they can pull that transitory card out again, only this time it's because of Russia. The supply chain problems are now because of Russia and the Ukraine. It's got nothing to do with the Fed. It's got nothing to do with monetary policy. In fact, the Fed needs a more expansionary monetary policy to counteract the damage being done to the economy from what's going on with these global supply chains. Like, we need more money, which is exactly what they did, when the oil price went up in the 1970s. That resulted in the Fed printing more money, creating more inflation, because the Fed wanted to offset the contractionary effects of rising oil prices on the economy, and the Fed wanted to make sure that consumers had more money to buy more expensive oil. And of course, that's what was fueling the process. And the same thing is going to happen again, which is why I do believe that the only viable path for the U.S. government to take, and maybe even before the next election, is going to be price controls. It is going to be rationing. I mean, we did that in World War II. We had rationing. Things were in short supply. We had price controls in the 1970s. That may be where we're headed, because I don't see the Fed doing what Paul Volcker did in the 1980s, not in the vulnerable position that the U.S. economy is now in. And that is why it's different this time, because when inflation was low, when the Fed could point to a CPI that was below 2%, well, at that time, the Fed could justify the cheap money. The Fed could actually say, look, the economy is weak, but also inflation is too low. And they came up with this cockamamie explanation of why too low inflation is bad. So we can kill two birds with one stone with this monetary policy. We can stimulate a weak economy, but we can also get more inflation, which is what we need anyway. We were not hitting our target. We didn't have 2% inflation, which supposedly is the holy grail when it comes to inflation. And we weren't quite there yet. And so we're going to pursue these policies. But when you've got inflation well above 7%. And with what we're seeing now, there's no way inflation is going to be under 10%, even the way the government measures it in 2022. So when you've got 10% inflation officially, unofficially, maybe double that, maybe 20%, if that's how much prices are going up, there is no way the Fed could claim that we need more inflation. And it cannot justify its excessively loose monetary policy on low inflation. But for now, what's going on in Russia is actually working to help somewhat and offset the situation, because it is driving some safe haven flows into the US dollar. And so that is keeping a lid somewhat on prices that are surging all around the world. But that benefit is not being enjoyed in Europe. I mean, prices are rising in the US despite a strong dollar. That means they're rising even more in Europe as the euro is weakening against the dollar, and other countries that are seeing their currency weakening. Inflation is breaking out all over the world. So it's impossible for central banks around the world to justify a continuation of this monetary madness. They can't keep shooting monetary heroin into economies that are already overdosing from all the monetary heroin that they've already ingested. So we are at the end of our rope. Yes, maybe we can have a small bounce as investors still haven't come to terms with the degree to which the situation has changed. given how much inflation we have, given the enormity of the Fed's balance sheet, given that interest rates are already at zero. If we are going into a recession right now, even if the catalyst for the recession is what's happening in Russia, what is the Fed going to do about it? They have no room to cut rates, even if they get the first rate hike in March. But then they have to turn around a couple months later and go back to zero because we're now clearly in a recession as opposed to just headed for one. How much stimulus is the Fed going to deliver when all you can cut rates is 25 basis points? Is it really going to make a difference to a weak economy if you take rates from 25 basis points to zero? Especially if inflation continues to get worse. But the minute the Fed does that, the dollar's going to tank. I mean, if the Fed has to go back to zero, I don't see how the dollar could survive that if the dollar hadn't already started to get killed based on the fact that the market sensed this was happening. What's going on with the safe haven flows to the dollar, that's going to blow over, just like any money that is flowing into these tech stocks and Bitcoin, because in this dynamic, these companies are not going to survive. I mean, right now, people are thinking, hey, the companies that don't have any earnings and don't pay any dividends, they're not affected as much by what's going on in Russia, right? We don't have to worry about the impact on their profits because they don't have any profits. They don't have assets in Russia that they're going to have to write down. Sovereign wealth funds aren't being pressured into dumping their shares at fire sale prices because of their connections to Russia. So people are piling into these stocks. But what investors are missing is the lack of viability of these companies because they're not going to be able to come back to the capital markets to offset their burn. Companies in this space that are losing money are going to lose even more money because of what's happening in the global economy and Russia than they were losing before. And their revenue growth is not going to be there. So the dynamics are no longer there. And how are these companies going to survive if they can't sell new stock at inflated prices? How are they going to keep paying their employees when their employees don't want to work for stock options because the stocks are tanking? The dynamics are going to change and the fortunes of these companies are going to change, and especially the people who are betting on them. This is a dead cat bounce in that sector. It is a dead cat bounce in Bitcoin, and anybody who missed the initial decline in the Cathie Wood type stocks or the crypto, this is your opportunity to get out of jail. Yeah, you're not going to sell at the top. We're nowhere near the top, but we're far enough off the bottom that you can sell and take comfort in the fact that you didn't sell the low. Although even the people who sold the low prior to this rally in a month, maybe less, will be glad they got out because we'll be hitting new lows. But I want to go over some of the economic data that just came out in the last couple of days that continues to validate the stagflationary argument that I am making. And again, which is why this time will be different. When you have a weak economy and inflation, that's much different than having a weak economy and no inflation, because the Fed has lots of options when there's no inflation. It has no options when there's high inflation. And when the world comes to terms with that predicament, the way they allocate capital, the way they invest money will be very different than the way they did it in prior cycles. The money is going to plow into the mining sector, agriculture, metals. It's going to go into value. It's going to go into dividends. Those trends that were in place prior to Russia are going to be back in place after Russia. But again, Russia's going to be here for a long time. The Biden administration needs Russia. This is the excuse they need. They need to take these problems into the election. They need to have a scapegoat. COVID wasn't going to be it. If you look at the approval ratings for the Biden administration, they were in the tank. They needed some kind of tail to wag the dog, and this might be it, right? This could be the new gift that keeps on giving, not only for the central bankers, but for the Biden administration to blame any problems in the U.S. economy on what's happening in Russia.